Hi there, Serial Trader here. I'm going to take a look at the major US indices and we'll just get right back to SPX where we left off in the last video to start with. And okay, so a couple scenarios presented last time that we had to go down one more time for potentially a triple zigzag, or that we already had the bottom in place on the 24th of February and we were working the initial stages of our next impulse wave up. So interestingly, despite this large move up we've had, which looks, quite promising for the more immediately bullish scenario, despite that, we still haven't resolved those two scenarios. And let me explain what I'm thinking in regard to that. So, okay, this obviously wasn't going to be an A, B, C down for the Z wave for 4 because we failed to come down here. But what if we just relabel here? Okay. And what if the X wave here is just simply being prolonged, if you understand where I'm coming from here, and we're just going to do an ABC up and just have to reorient where this X is, and then we're still going to have this subsequent move down for the Z wave of 4, back to at least below the 41.14 levels from the 24th of February. That is still on the table. Now, I'm not necessarily favoring this outcome, but it is still on the table until some things happen here, and let me explain. So now that I presented the potential, bearish scenario, let's just remove some drawings here, or remove the labels, and let's just relabel this in the more immediately bullish scenario, and that's where we just have a, W, X, Y, double zigzag already in place. Okay, and if we have the double zigzag already in place and the low is on February 24th, then what are we working here? Well, we would have to go with probably a 1 ABC expanded flat 2, and then we'd obviously be looking higher in this third wave, and within the third wave we'd have to go in on the shorter time frame, but I think you get a little potential leading diagonal 1 and then deep retracement, almost 100% retracement, but not quite. So we went down to 41.61. The low to hold for that was 41.57. So technically a super deep but still valid potential wave 2 of 3 retracement, and then we'd be looking for subdivisions to the upside. Let me drop this degree down by 1 here, just to illustrate the point. So if we are in this 1-2-1-2 scenario off the February 24th low, and we're about to, well, if we're already in the midst of exploding up in this third wave, what do we really need to see here? Okay, so let's draw the base channel like this. So that's where you connect the origin of wave 1, the extreme wave 2 with the extreme wave 1. And then what we really need to see, so if we just fail right around current levels and start reversing, that starts looking more like a 3-wave move up, like that X-wave scenario, and potentially vulnerable to one more push down. But if we really cleanly break above here, and let's put on some Fibonacci extensions too. So in a typical wave 3, you'd be looking for probably at least a 1-6-1-8 relationship. 3 versus 1. Ideally more than that, but that's kind of a minimum for a strong wave 3, especially when you've broken out of this base channel, you make the 1-6-1-8, that starts getting pretty difficult to call an ABC up at that point, right? But we're not there yet. Right now we're here, where we could very much still just have this 3-way move up contained within this corrective price channel. So another thing, if we were to take out and be able to close above this level, so this prior X wave, that prior corrective bounce up at 45.95, so let's just say get above 4600 area, start closing above 4600 area, and I think, you pretty much have to fully embrace the idea that we're already in the next impulse wave up for that larger wave 5 that we're expecting, during, at least part of this year, several months of this year at the minimum, if not, possibly into the end of the year next year, depending how long it lasts. So that's the bullish scenario, and that's what you need to see for the bullish scenario to kick in. Right now, we're just at that kind of decision point. Do we fail right away and turn back down, in which case the triple zigzag is still in play? Or do we have strong continuation with only minor pullbacks? And of course, on a shorter term basis, like on an hourly chart, things are getting pretty extended. you're bound to have some sort of pullback soon, I would think. But as long as it's just a modest short-term pullback, nothing too threatening, then we could very much still be in this more impulsive third wave up already. So those are the two scenarios I'm tracking. We also had a very strong, now I'll show it on the other chart, of course, but let's look at it here on the weekly. So we had a very strong weekly weekly bullish engulfing candlestick, engulfing 1, 2, 3, 4 prior weeks real bodies. So that is a very strong bullish engulfing candlestick pattern, and on the weekly time frame. So to me, that also elevates the idea of the bullish scenario already being in force here. But we have to be vigilant, as it could still fail near current levels if it's going to, and then turn back down in that triple zigzag scenario. But let's just go to the, I think there's some candlestick charts now that I've kind of made my case there. And okay. So we're right up just below the 200-day simple moving average on SPX, okay? So this is also an interesting level where selling might kick in, potentially, if it's going to. And if we look at the, now there's also a candlestick pattern, a reversal pattern called 3 white soldiers. And just give me a moment to show you kind of a textbook version of that. Okay, so down here is the 3 white soldiers candlestick pattern here. Just a Google search to show you the kind of idealized version of it. So yeah, you've been coming down, down, down. You have kind of a smaller candlestick here, showing kind of a sign of indecision or potential reversal. And then you get 3 strong green bars to the upside. It's called 3 white soldiers. I think that's typically because you know, traditionally they didn't have green and red candlesticks; they just had black and white. So that's all that is. And then the bearish counterpart would be 3 black crows. In this case, on the daily chart of SPX, you got a legitimate 3 white soldiers pattern there. Okay. Okay. Now back to think or swim. So yeah, off the bottom, I think you can make a strong case. We had the 3 white soldiers reversal candlestick pattern to the upside. Instead of a single candlestick bar like some of the candlestick patterns, it's a multi-bar pattern. In this case, 3 bars. And of course, we've got a 4th, positive day as well, kind of confirming that reversal. So there's lots of reasons here to lean more to the bullish scenario. But okay, so on the weekly chart, of course, we got the bullish engulfing candlestick on the weekly right there, and we close back above the 50-week simple moving average, so that's fairly positive as well. And you can see we've been contained by this weekly T line, the 8-period EMA on the weekly. That served as resistance in prior weeks, so we tried to bounce up. This time we closed well above it strongly. So yeah, a lot of things are suggesting the more bullish scenario is already in place, but we have to still entertain until we get a little bit more upside confirmation. Like I discussed, we still have to entertain the possibility of turning back down, even though I think that that possibility is diminishing. Okay, so that's SPX. Dow Jones Industrial Average, very much in a similar position here to SPX, so not really much to comment on there. I think the weekly is the same as well. Not quite a weekly bullish engulfing because we didn't open low enough, but same idea. Still has the same look and feel. Okay, that's the Dow. Nasdaq Composite. Now the Nasdaq Composite doesn't look as strong because obviously it's gone down more, so it's got more work to do to the upside to convince me that the bottom is in place on the Nasdaq. And of course, if the bottom isn't in place on the Nasdaq, then it's probably not in place on the S&P or the Dow as well. But this could easily start leading to the upside and erase those worries pretty quickly. But here we are stalling kind of right around that 50-day simple moving average on the Nasdaq. So again, if we're going to turn down, it's probably going to be right away. Otherwise, I think the bulls are going to start running here. Weekly candlestick here on the Nasdaq Composite. Yes, that is a weekly bullish engulfing 1, 2, 3, 4 prior weeks. So again, powerful weekly reversal pattern here on the Nasdaq Composite as well. So just want to point that out. Okay, let's go to the Nasdaq 100 in case there's any differences. No, I think it's very much in line with the composite on the weekly as well. Let's have a look. Yeah, weekly bullish engulfing. Looking great. Okay. So no discrepancies to mention there. Now let's go look at the VIX. Now on the VIX, we've clearly had a sharp reversal down, which, you know, a VIX going down is certainly typically bullish for SPX and, you know, generally stocks going up. So the VIX is certainly going down, but the VIX hasn't gotten below the prior swing low here. So if we do make a higher low on the VIX, that may, you know, be some cause for concern for another, you know, potential downdraft in the markets. But for now, the drift is, or sorry, for now the VIX is going down sharply, so that is positive. Okay, and on the VIX VVIX tool, VIX VVIX tool. So okay, let me put these aside for a moment and just discuss the most recent thing we had. So we basically had a VIX VVIX divergence. So here was a relative, you know, the reference high on VVIX. We failed to make a higher high. Basically made a kind of a triple top formation, but technically a lower high compared to this reference point on VVIX. At the same time, VIX was making higher highs from that same reference point. Okay. So we had a VIX VVIX divergence. Then we got below the red moving average on VVIX, and we've essentially been below there ever since. And then eventually, after SPX tortured everyone, you know, threatening to make new lows but not actually doing it, we got back above the blue moving average on SPX. And after that, we had the confirmed buy signal, which we're still on for the moment. So just to point that out. Now, where I want to get to now is the next potential signal that may be forming. Again, I'm just trying to be, even though I'm overall, you know, bullish here, I'm trying to make the case, you know, for the bearish side in case we do get one more downdraft. We need to be at least on guard for that potential. So with that said, here we have a potential larger, even like larger as in the longer time frame divergence between VIX and VVIX. So here VVIX making new lows relative to this reference point, whereas VIX so far is making a higher low compared to that reference point. And then what would the next step be? Well, the next step would be getting back above the red moving average on VVIX, which, you know, we're not there, not even close to there yet, but something to watch for. And then subsequently getting back below the blue moving average on SPX. Again, neither of these things have happened yet, but just if we were to turn down, this is what you would be looking for, right? But still, as of right now, currently on a buy signal. Okay, so that's what I wanted to point out there. And just in regard to my own, I guess, positioning, if you will, on all of this. Okay, so I'm still holding long June futures on the S&P. And I wouldn't really want to add to them until I see, you know, absolute confirmation of the upside. So yes, I would actually buy higher if we really start breaking out convincingly to add to the position. But we're kind of in no man's land here, as in we could have immediate continuation or basically turn down from near current levels. So for me to add to them, I either want to see, you know, strong confirmation of the upside before doing that, or I would want to go back down, you know, to make new lows in that triple zigzag scenario. Even though I think that it's diminishing in likelihood, I would be willing to make, you know, or add to the longs below that February 24th low, maybe around 4,000 or that 3,800 to 4,000 range, you know, I discussed in the last video in the triple zigzag scenario. That hasn't really changed, other than we'd have to redraw that X wave within that triple zigzag like I discussed. But yeah, that's all I'm really looking at here. You could put on a cheap options hedge, like I've been mentioning, I think in some of the past videos recently, in case we do turn down. So, say, like for me, I'm already long, so it's not a bad idea to have a little cheap options hedge to at least take the sting out of turning back down, even though I'm planning on adding more down there. It's nice to have something work if you do turn down like that, and you can make it pretty cheap, as I've mentioned in prior videos. Okay, well, that's probably good for now. Serial Trader, signing off.